Hi, thanks for coming.
Nice to have you, Pepe.
Thanks for having me.
Yeah, good to have you here. Thanks. Let's get right into it. I mean, Crowdcube.
Yeah.
Can you give us a couple of examples of how that works?
Sure. Well, for those who don't know Crowdcube, we are an equity crowdfunding platform. We were established in 2011. So it's been a ride. Obviously, we're the first generation of fintech companies working with other companies to raise finance from the crowd. So we were born to help startups in seed and early stage, raising money from not only angels and VC investors, but also from the crowd, from the public, from people like us, average or everyday investors, like we like to say. So in these almost 11 years, we've raised over 1 billion euros for 1,200 businesses already, startups, some big names that I will talk about, like you said, great success cases. And at the moment we have like 1.2 million members registered on Crowdcube, and now we're expanding across Europe because we are in a regulated sector that needs to be approved by regulators. The activity we do is heavily regulated now, and it's becoming cross-border as well. And my role, as you said, has been expanding Crowdcube across Europe, and now focused again on making things happen in South Europe. So case studies, and those are the ones that we like to talk about because those give confidence.
Exactly, numbers are numbers, but
exactly.
give us a name.
At the beginning, we struggled to get proper good founders to use Crowdcube because it was not a very known place to raise money. It was more sexy to raise money from venture capital firms and angel and big names. But some companies saw a benefit of raising from the crowd, and the crowd is not everyone. It's just mainly their customers. So they saw a potential to engage further with their customers by turning them into shareholders, which is, today it's a very strong wave coming from the US, actually, which is make your customers co-owners. That's the next level of engagement for your customers. And the first company who did that was Revolut, actually. In the very early stage, in the Series A, I think it was, Index Ventures was investing in Revolut, but the founders decided to allocate 1 million of the total amount, which was around 15 million, for the customers. So people was crazy, and they were waiting for it a lot. So it was a waiting list of thousands of people waiting for investing. And the day of the investment, I mean, it flew. Like, not even a minute. Our platform crashed because everyone wanted to invest. And it was not easy to invest as well because you had to be a Revolut user. So that's where they tried to engage more with their customers. Like, if you bring 10 or 20 new users, you'll be able to buy shares of Revolut. That's not very democratic, by the way, but it was a good exercise. And I think that showed to the startup and tech ecosystem and environment, and also investors who have been educated alongside these businesses in the last years, especially venture capitals, that this is more inclusive. This should be part of some, not all, but some businesses who want to build communities around them, especially direct-to-consumer, B2C businesses. Food and beverage is a big sector, but fintech is also a very big sector in our portfolio. And since then, so everything changed, obviously. We started to talk more with growth and later stage businesses, and crowdfunding has now evolved. And we are more a marketplace for later stage businesses than seed stage businesses. It's difficult for a seed stage company or startup to raise money from the community if you don't have a community yet. So there are very specific cases where we see traction on seed and early stage companies raising on Crowdcube, but the majority of them that we work with are Series A+. Some of the case studies that I really liked to explain here in Barcelona, I'm still in Barcelona. In Spain, it's Eura Foods, for example. It's not probably you know them, but they are plant-based meat, Spanish Beyond Meat. Let's say they grow. I mean, they are like 140 employees at the moment, but when we raised for them a year ago, they were only 50. They're growing very fast. They've been attracted and they've been approached by many, many investors all across the world. Now there's no borders, so a lot of foreign investors are investing in Spain, in South Europe, in many places, so it's very, very international. They decided that for every capital raise they do, or every fundraising they do, they will allocate a portion for the community of customers. And they call them the Good Rebels. And these Good Rebels is becoming quite an army of people who believe in plant-based proteins and who believe in change and environment. So they're turning their customers into co-owners, but also into salespeople, into ambassadors. Every time they open a job offer, the first ones applying are the shareholders of Eura. So they now have about 8,500 shareholders, everything managed properly from our legal team, amazing legal team, obviously. And they will do and will keep doing this in order to turn their customers as a community. I think these two cases are very, very impressive, in my opinion. For seed stage companies, as I said, there's some exceptionalities, like, for example, Nothing Tech, company built by Carl Pei, founder of OnePlus. They were in seed or MVP, not even had a product, but they were like building a momentum. And before they launched the first product, they opened an allocation on Crowdcube of 1 million as part of a seed raise with Google Ventures leading the round. Who couldn't say, no, I'm not going to co-invest with Google Ventures?
Right.
That's how we created this kind of alternative investment method or alternative investment asset class for the ordinary people, which basically is you can buy shares alongside venture capital firms and high net worth individuals. And 10 years ago, it was almost impossible if you were not well connected and working in a VC.
Wonderful. I'm glad you mentioned Eura because I think Mark is also
Yes,
speaking
it's-
here
it's-
on
it's everywhere,
another stage
actually.
today. So it's very nice to see the
Yeah.
ecosystem coming together here.
Yeah.
So you already mentioned it a little bit, but could you go a bit deeper into if, like, the companies out there, if they're thinking about it, what are the advantages of really raising with you rather than going to another VC?
Of course, it has changed with time. We come from a crisis, so we are anti-cyclical quite much. So now, for example, in growth stage fundraising, there is a kind of there's worry, right, in the market because there's more difficult to raise big amounts at big valuations. So we're there for those companies as well. There will be a lot of bridge rounds and extensions of other rounds. But the main reason is to diversify your cap table. When you raise from venture capital and angel investors, you want to have more options for the future to raise more capital. So you have a more diversified cap table. It's also because they want to have more control of their cap table, the board, so they don't need so many people in the board. They can just have a passive investor representing thousands of individuals. Some companies even go farther, and they appoint one of the shareholders to be the voice of the crowd. And they are an observer on the board meeting. That's another cool reason. And at the beginning, in the early days, it was a lot about PR and visibility. So you do a crowd round, it's a very public exercise, so it's becoming very similar to an IPO. So it's actually a public offering, but the difference is that when you buy shares into a startup on Crowdcube, you cannot sell them the day after on the stock market to other investors. So it's not speculative. Actually, we don't want that to happen because we want companies to keep their crowd investors engaged in the long term. If they are able to sell the shares in days, months, then they will lose some brand ambassadors, and that's not what they want. They can do other kind of funding for that reason, for that specific reason. Yeah.
That's wonderful that you're really helping companies that are going for the long term and also the investors who are not going to sell tomorrow,
Exactly.
if it goes up 10%. Good. And for like the companies out there that are wondering, how does it work? Like, what kind of steps do I need to, take? Obviously, you talked about the PR part, but what is kind of like on the backstage? What do I need to do with my company?
Yeah, it's not an easy process. It requires focus, first of all. It's an exercise that it takes in between 2 and 4 months, depending on the stage and the business and the capacity you have. So we are very honest, so we are very approachable, first of all, very easy to speak with our fundraising team. But we always say the truth, which is you're going to be focused on this for 3 months. And if you do it properly. If not, please don't waste your time. Go for other source of investments. And it's basically a process of 3 stages. The preparation stage, which is mainly preparing the narrative. You're going to go to the public and the crowd with a narrative that they need to understand. If you work for a deep tech or clean tech company with a highly technological specifications or highly not easy to understand, you need to prepare the 3 bullet points to make ordinary people understand your business. That's easier with Eura, right? But not with some other clean tech businesses or deep tech businesses we work with. So basically, first month, prepare, which is the assets, the assets, the deck, the video, the imagery, etc. Second month is actually the campaign. Everything is ready. Everything goes live after our compliance team approves, so you go through a due diligence. And it's not the kind of due diligence you will get from a venture capital or angel investor, which is mainly persons, right? When you invest in a seed or early stage, you go after the team, you invest in that team and the market, the scalability, all of that. Here, what we do is making sure that everything that the crowd has access as part of the financial promotion is fair, clear, not misleading. Which basically means, if you say you studied at Stanford, our compliance team will chase you to show your certificate of Stanford. If you say you have 1,000 customers, we will verify you have 1,000 customers. So similar to fact check in the press and the media, which is something not everybody does, but we have to do it because we're regulated. So all of that is part of the preparation. When you go live, it's basically the show starts. You go live, you tell to your customers, hey, you can now register interest to invest in the business and become a shareholder. There's usually 2 stages, private and public. Private is for the customers and the people who already know the brand and the business. That's what, for example, Revolut didn't go public because it was no allocation for the public. It was everything invested by their own customers. And actually, they had 10,000 people waiting in the waiting list, and only 1,000 of them could invest. Lucky them. And then after that is the closing. Closing is basically completion's boring process of know your customer for every investor. So we need to verify that every investor is who they say they are in the register process on Crowdcube, send in the money, and then do the capital raise with lawyers. So it's 3 months, barely, more or less. And it's becoming, as I said, more and more similar to an IPO. When companies IPO, they announce it 12 months before. And then people start thinking about, well, I'm going to buy shares, maybe yes, no. You go to the broker and you buy the shares. So this is in the private stage, an IPO in private stage, I would say.
And so that's why also companies then come to you to do the KYC and take care of all of those?
Yeah, sometimes we have companies not public on the platform. Actually, more and more. We have companies raising in private. They want to use our technology and regulated environment and compliance checks in order to make sure they have a clean cap tables, only one shareholder representing all the investors, and also making sure that nobody is laundering money through investing in startups, which could be a big news media.
That wouldn't be good for anyone involved.
Not here at all.
Yeah, so, well, we've been talking about all the positive sides, but I have to ask, what are kind of the difficulties? Like, who's this not for? Are there any companies that you would say, no, you better go with a traditional VC, and I know someone?
I think it's less and less happening that because founders are more educated than public about funding and failing, especially in Spain. It was 10 years ago in Spain, nobody wanted to fail. If you failed, you were pointed and you had to leave. And don't start another business again here because you're not going to raise money. But I think we've brought a lot of education, but there's still some founders who doesn't fit because they whether don't buy into the idea of getting customers as shareholders, which is fine. It's not for everyone. Also, I think very heavy companies who need a lot of cash, a lot of money to, for example, biotech companies. Those, I mean, they go through stages, right? Stage 1, 2, 3, 4, 5. You need specialized investors to help you getting also into the pharmaceuticals and all of that. We don't provide that kind of support or help or mentoring to the businesses. We have 1,200 businesses. We couldn't mentor half of them if we wanted. So you indeed need strategic investors giving you advice and helping you through the way, especially with experience in your sector if you need. But we don't do that. And so, and for those, we are very, very frank and very clear. We can't. Obviously, if you don't, by the way, the basics is if you don't have a limited company established, you cannot raise on Crowdcube because you cannot sell shares. So that's obviously the first cut we do. And then on the other side, on the investor side, is for people who is not willing to lose money, this is not for them. So when you are investing through any crowdfunding platform, actually, equity crowdfunding platform, I think you have to do kind of a couple of tests, like MiFID test when you invest in the stock market through your broker. It's more and more scary, but I think people like to be in a process which is scary. The more you say don't do it, people, I mean, we want to do it more and more. It's like a challenge, right?
Especially the rebels.
Exactly. So yeah, for those investors, sometimes we have to block some investments because people don't really understand the nature of this investment, which is capital at risk. It's a high risk. It's 90% chances you will lose money in your investment. So diversify. Don't put all your money into one. Do what VCs and savvy angels, as the one that we had here before, do, which is spread your money in between at least 10, 20, 15 50 companies. You can do that now by investing 100, 500 or 1,000 euros in a super diversified portfolio. You asked about difficulties as well, right?
Yeah.
Regulation is a difficulty. We are still a bit startup, not anymore. We're 150 people in the business, but regulation is a nightmare. So the team that is growing the most is compliance and legal. It's becoming more heavily regulated because we work with larger businesses. Larger businesses have more legacy, more debt, more complex company structures, more subsidiaries and liability. So it becomes a challenge because those companies could IPO, could go to the public markets, but the trend now for private companies is to stay private longer. And if you stay private longer, you want to raise money from the public, what do? You go to the crowd. Recently, Elon Musk, when he said he wanted to turn Twitter private, he said he wanted to crowdfund Twitter with the users.
Yeah.
So the shareholders who hold the shares on the broker that will lose, we'll need to sell the shares now to Elon. He will give them the chance to buy shares again through crowdfunding platforms, which would be amazing because it would boost our sector, obviously.
Yeah.
But regulation is indeed a challenge. And finally, education. We are an Anglo-Saxon business, very UK-rooted, but now expanding across Europe. But cultures in Europe is a very fragmented market continent. It needs to change in every market. In Spain, Spanish investor risk averse is completely different to the British or the US or to the French or to the German, super focused on real estate, like here, right? So we need to educate a lot, and that's a challenge, and it takes a lot of time. And first, especially for the first ones.
And well, looking into the future then, where do you see those challenges going? Where do you see the market going? What's the future of equity crowdfunding?
I think we're ready. We've moved very, very fast in the last 2 years, and I would say future is cross-border and very international investments and fundraising for businesses. We already seen the US regulating the sector, and Europe now is harmonized in November 2021. A new regulation framework came in place, promoted by the European Commission, which is great because we don't need to go to each regulator in each country. That's for sure cross-border and harmonization of the sectors. And liquidity will be also part of this. I think liquidity is the big challenge for angel investors, but it's not that cool as people think it is. We've done some tests. So for example, we've asked Crowdtube has 3 shareholders who are venture capital firms, Balderton, Molten, and Circle, a corporate investor from the US, and also we have 10,000 shareholders, individuals. Obviously, we crowdfund ourselves. We asked them in the last raise, we raised recently 15 million or 12 million fresh cash at a price valuation. And we asked some of our shareholders if they wanted to sell into secondaries. Actually, all of them. Well, less than 15% wanted to sell. So you can build an amazing tool for secondaries and to sell shares, but people don't want to sell shares in a business that is going like that. And people doesn't want to buy shares in a business that is not going well.
Right.
So secondaries will be challenging, and there is a different approach of secondaries in the market, in the industry, and it will become a big part of that. But I think it's going to become a proper stock market, challenging the stock markets and the alternative investment market for giving companies more chances to raise finance from the public.
Wonderful. Pepe, I could keep
already
on talking.
20 minutes on.
Yeah, that's already it. It's usually my job to kick off the moderator off stage, so now, I'll have to do some gymnastics, but unfortunately, that's our 20 minutes,
Okay.
but I'm sure you'll be available to anyone who has further questions,
I'm around.
out the door.
Yeah.
So thank you very much, Pepe.
Thank you.
It's been a pleasure.
Thank you.
Thank you.